I think that if you're not paying attention, you're going to be missing out on a big trend. This is one of those things that goes mainstream, and ultimately, I think it's genius, and I'm refreshed by it. This is a perfect use case for crypto.
We're back. Welcome to another episode of 1000X. We're happy to have you. Finally, we get some volatility. It's been boring as hell this entire summer, effectively, since we hit 32K. And we finally got some vol. Bitcoin traded down, ended up breaking down from that 30K range to 26. And now we're teetering here on the edge. And a lot of arguments to be bullish, a lot of arguments to be bearish. But Jonah, where's your head?
I mean, we were literally just trying to come up with ways to stay awake this summer, and then bang, right? 15% sell off. I would say that when I look at price action like this, it makes me nervous, and I think it could go a lot lower. Just total finger in the air, like watching it like nervously stabilize around 26. But if you go and pull up the open interest levels and you look at how much length was liquidated over the course of this sell-off, the picture looks really clean. So I despite being a crypto bull and feeling nervous about length right now, I think this is a time to buy with both hands. I think that if you have dry powder, and hopefully you do, you're supposed to be adding meaningfully here. I think what happened is a lot of participants got long or even levered long ahead of the anticipated GBTC versus SEC decision last week. I think the market was expecting the judge to come down in favor of GBT, or Grayscale rather. And then nothing happened, and maybe a bit of cascaded liquidations as people just exited positions. So I think all of that weak length is gone, and I think it's a clean slate that you're supposed to buy.
Yeah, I'd agree with that. The only reason why I would be slightly more hesitant is if I believe that the equity markets were in trouble. I think September is going to be macro podcast season, unfortunately. I really enjoyed my break, not listening to any macro podcasts and not really paying attention.
Does this count as a macro podcast?
No, because we're not opining on macro the entire time. We're talking about some other. I do think that some of it, like listening to an hour-long podcast on inflation, is very tedious, in my opinion. Because people just tend to repeat themselves, and like once you've heard the same argument once, you hear it again. But I do think that it's important to start paying attention again. I do think that equities provided you a period of time to flip from bull to bear. So if you actually look at go to TradingView, whatever charting software you enjoy, pull up Bitcoin, and then overlay coin and overlay MSTR, and you'll see that both coin and MSTR nuked before Bitcoin nuked. So, and when I say nuked, I don't mean they were down 3%. I mean they genuinely nuked hard, 10, 15%, right as Bitcoin was ranging, which gave you some indication as to where the interest is in the market, and the interest was not in crypto. And
there's a lot of alpha in that statement. Like I don't trade like that. I try to trade around a core position. I think that anybody out there who is in crypto, probably a bit bullish crypto, who had the guts or the courage to get short, tactically short in this summer doldrums period, playing for this dip, is a truly lucky or truly talented person. But that is interesting what you bring up. Like
I disagree with that. I think that it was prudent once you got that move up to 30. So we were ranging for a long time.
Yeah.
Once you got that move up to 30 and you rejected, and then you got equities nuking and Bitcoin was still above 29, that was a chance to at least protect yourself. That was a chance to say, okay, well, this was 2 weeks ago when we recorded the pod. We were trading up. We tagged 30. I said that I was bullish. And then we rejected, and then we traded basically 4 or 5 days sideways. And during that 4 or 5 day sideways period, coin was nuking, MSTR was nuking, all these other things were nuking hard. And I view those as indications of institutional interest in the asset class. And so what you were sort of holding on to is you were saying, okay, well, we know that there isn't enough buying power to get us above 30 right now. We got rejected. We know that there seem to be institutions and other holders exiting through coin and MSTR pretty aggressively. And so given the fact that you have a pretty reasonable stop out above, call it 30.2, 30.4, makes sense to start to protect yourself. That's also one reason why podcasting is, for all the listeners out there, it's very important to take into account why somebody is saying the thing that they're saying, so that you can. And what I try to do is I try to lay it out very clearly, so that when you hear my viewpoint, you understand why it might change, and you can factor that in, because we do only do this once every 2 weeks. And obviously, as a trader, sometimes my bull bear takes will change day to day depending on new information that I get, and that Jonah gets. You just sort of have to update information. But I will say that once we didn't get above 30, and then you get, I would honestly, if you're trying to directionally trade Bitcoin over a 2 week time period or a 3 week time period, make sure you have coin MSTR Bitcoin miners on your watch list, because I do think that they are actually reasonably predictive in certain scenarios. So if Bitcoin's ranging sideways and it's a low volume time period, you can actually catch those inflections of demand and supply, I think, through those pieces of equity. So that's just something that I find particularly valuable
That's
my day to day.
interesting. Do you find it valuable when both Bitcoin and the minor stocks plus Coinbase plus MSTR are trending in the same direction? Do you find that
No,
the equities are useful, or is it only when BTC is range bound and the
it's
equities are moving?
basically BTC range bound. I'm trying to pick a direction.
Okay, so,
Are
so this
are
is
are, are equities strong or weak?
this is critical, right? Like you listen to podcasts all the time and you get bulled up or bared up on the basis of what the podcasters are saying. I think, Avi, what you're trying to mention here that I think is important, and you hear about on a trading floor all the time, is process, right? Like what is your like do you have a process for arriving at a trading or a risk decision, and is the process consistent or improving throughout time?
Yeah.
um
Yeah, like what I hate is when people say, "Oh, hey, great, you can use equities to trade Bitcoin and ETH. Sometimes they're predictive." Okay, when? How?
yeah.
Okay, what are you going to do? Great, MSTR is up 5% today. What does that tell you? Well, it doesn't tell you anything in context, or it doesn't tell you anything unless you put it in context. Okay, so the only place I've found it valuable is when Bitcoin's going sideways and it needs to pick a direction, and you're trying to figure out what direction it's going to pick. That is the only scenario that I've actually found Bitcoin equities or crypto equities useful in terms of Bitcoin predictive,
See, that's interesting.
outperformance
I
or
hadn't thought of
underperformance.
that. And like what I was thinking when I was watching miners and Coinbase, during this sort of slowish summer for crypto was, okay, crypto's not moving, but the miners and Coinbase have just gassed higher to, local highs, right? All right, now they're retracing a little bit, whatever, from local highs. They were, decorrelated from Bitcoin on the way up. Maybe they'll be decorrelated on the way down. Like
I
I
don't.
just wasn't
They
even.
weren't decorrelated. I mean, they actually. One thing that I will say, I'm just going to pull up the chart
They're
real
not
quick.
trading
Is
tick for tick though, dude. Like they're
they're
like
pretty
Bitcoin
pretty
literally didn't move for a few weeks.
pretty darn close. I mean, they topped on a very similar day. Yeah, it wasn't exactly on the day that Bitcoin traded 32, but they basically topped on the day that Bitcoin traded 32.
Okay.
When you have things that you look at in the market, what I try to do a lot is place them into very specific contexts and then start to overlay, right? So, for example, one thing that you can look at is breaking the 200 moving average. Well, what's more important? Sometimes people talk about breaking the 200 moving average to the upside. Sometimes people talk about breaking it to the downside. You can actually run a study on that. Is it more predictive of momentum breaking it to the upside or breaking it to the downside? It's actually a very easy problem. I'll leave it to the listener to decode. But these types of things, right? So sectioning off. Okay, well, I'm gonna look at this indicator. but in what context does this thing work? In what context does it not work? And then you start to piece together. Now, I actually have a notion. I have all these different rules of things that I look at and where I see them tend to work and where I see them tend to fail. And then I use them. I'll review them. I'll take a look, and then I'll try to apply them to the current market. And I'll say, do any of these apply right now? What's important,
It's interesting.
right?
I mean, I have a slightly different process honed from TradFi, which is that so basically the process that you just described, or any process for the listeners, it's something that you can cling to when you're losing money. It is an objective framework that helps you from stopping out of positions when they're temporarily not going your way. That's why you need to have a process that's sort of somewhat static throughout time. Otherwise, you're just going to be buying on the way up and selling on the way down and chopping yourself up. So I did that for a period of time in my career when I made the excruciating transition from market maker working at a bank to Avi Fellman style prop trader working on the buy side. I had to unlearn a lot of bad habits, and I had to stop myself from day trading without a framework. I was just sort of blowing in the wind, and I screwed up quite badly and almost got myself fired a couple of times before, on a last ditch effort, I had to develop a process. And that process for me, like I like to take a call it a 6 month to a 2 year view on my asset class and find ways to hang on to that. So I'm usually pretty right over the long run, but over the short run, on the time frames that you're talking about, Avi, I'm pretty weak. I'm not a very good
Mm-hmm.
trader. So what I did was I basically put a yellow sticky on my monitor that said, do not day trade unless you have back tested your strategy." So I had that on my monitor for years.
Yeah,
And
well, I'll say that's an important part, right? It's not just that's part of the process. So it's like, okay, well, you have these certain situations that pop up. Can you quantify them?
yeah, okay, so
What's
there you
what's
go.
what's your what's your hit rate on these types of things? I mean, a lot of trading is just coming up with strategies that you sometimes will organically observe. Then you'll go to your quant if you have a quant, or maybe you are your quant, and you say, hey, okay, how do I put this into a framework that is repeatable? So, for
Yep,
example, is there alpha if the you have two correlated assets, Arbitrum and Optimism? If Optimism's up 8%, if the Arbitrum Optimism pair is up a certain amount, will there be mean reversion, right, at some point? And how much does that have to blow out before mean reversion starts to kick in? It's like, okay, well, maybe it's if it's up 8%, maybe it's 10%, maybe it's 15%, right? It's like, okay, well, now once you get to 15, 20, maybe you're at a 3 standard deviation over the last, if it's up 20% over the last 2 weeks, maybe at a 3 standard deviation type move, and mean reversion is gonna probably kick in there, right? And then you start
yep.
to quantify these things, and you start to tag them, and you start to look for them. I think there's a lot of idiosyncratic upside for Doge, and there's a lot of idiosyncratic downside for BCH.
That's not a mean reversion thing. That's just a secular
No,
trend, right?
that's just slightly different, but um, it's like these can you juice alpha in these types of certain situations, right? Where you have, I mean, on Doge, you have the dog potentially dying,
Yeah.
unfortunately, which is bullish for it. You have, I think Elon's launching a rocket with the Doge on it soon. Elon rebranding to X, and then on BCH, you have a completely manufactured pump that sent it to 240.
If you can find an efficient way to get short altcoins like BCH, there are a lot of those trades. Like long
There are a
ETH,
lot.
short Polkadot is another one, but like good luck getting short Polkadot, right? It's without like waking up one morning and while you were asleep realizing that the perp blew out to like negative 200% APY funding for a couple cycles and ate up all of your P&L, right? These markets are inefficient. So,
Hugely. One thing that I really like, by the way, when it comes to, so you'll get these scam pumps from things like BCH, from things like Aptos, from things like Sui, that tend to be characterized a lot by perp volumes blowing out, by a random spot bid that's appeared for nowhere, by a tremendous amount of open interest, and you'll get BCH from like 120 to 240 for example. It's like, okay, well, how do you think about shorting that, and where do you think, if you're going to short, how do you think about shorting that? What I tend to do is I tend to wait for a period where it's off 20% or so from the highs. It bounces, and then it retraces back down to that 20% from highs. And then that's when you normally want to short it, is when the bounce when a bounce has failed in one of those scam pumps, is when you
And
tend to want to
20%
short it.
is just arbitrary.
Yeah, it's sort of arbitrary.
It's
But
the
here's the
same as
part
like, oh, sorry,
but
go
here's
ahead.
the part that's not arbitrary. Then the question is, well, where do you tend to want to close it? Because sometimes you get caught in these situations where it'll start going back up. And so where does it normally start to go back up is kind of the interesting point. Let's use an example of an asset that goes up. Let's go up from 100 to 200. It goes down to 180, and then it goes back up to 195, and then back down to 180. Okay, great. That's your trigger point. You're going to short 180.
Mm.
Where do you close? Do you close at 100? Well, no, you don't. And the
You
reason that you
close it
don't,
where you think fundamental value should ultimately be
you don't,
after
not
the
not
dust has
fundamental
settled.
value, but where the risk reward makes sense for other traders to come step in, because this market trade, especially these types of things, tend to trade very technically. And so let's say the top of the pump 200, bottom of the pump 100, you've shorted 180, and it trades to 150. Well, at that point, you have to think about what are other people seeing in this chart? How are other people seeing this asset trade? They see 150, and what they see is that there's a stop out below 100 where the scam pump began, and there's a target of 200 where the scam pump ended. So the risk reward is about equal. And so there are probably not that many people that are gonna step in there. But at 140, that starts to become a little bit more interesting, right? So you see people that will look at a chart like that. They'll say, okay, if I buy 140, then I can stop out 100 and target 200. My risk reward starts to look a little bit better.
I see what you mean.
And then at 133, it's 2 to 1. And generally 2 to 1 is where I find people in crypto like to step in when they see those types
Double
of
your money.
trades,
Yeah.
right? So double your risk one to make two.
See, in TradFi, some of these things that pump like crazy actually have fundamentals. Like for example, the March-April natural gas spread. March is
Mhm.
the last month of winter when natural gas is in high demand in the United States, and April is sort of the first month of spring when natural gas is abundant and there's not like it can't get really squeezed by too much demand and not enough supply. So that March-April time spread, usually it's worth like 30 cents an MMBTU at an extreme, usually 20 cents. But I remember back in 2018 during some crazy winter like polar vortex thing in
Mhm.
America, it pumped up to $2. And that was the craziest thing that anybody had ever seen. Billions of dollars of capital were lost on this. And the whole time the thing was worth like 20 or 30 cents, but it went up to $2, which is crazy. And it kind of feels a bit like crypto when it's trading up there. How do you know? Why wouldn't it go to $10? It's like oil and gas during the Ukraine war. Could oil go to $500 a barrel if Russia starts war with the West? Sure. But you don't know how high it's going to go, but you know that fundamental value is probably a lot lower than the current price. And so when you say that something's quote scam pumping in crypto, like theoretically your fair value for BCH is what? Um, 0, right? Like what do you actually think that token is worth? Before you answer, just like
Yeah.
I take your point about people wanting to come in and get long because it just traded up, and this is a little bit different than a commodity or a commodity spread that has like physical end users that will ultimately drive fair value to fundamentals. But like at the same time, when I think about these things, like usually the way that I look at it is a little bit different. It's not like, oh, 20% off the highs, or oh, where would someone take the other side? It's literally like go to wikipedia.com, type in Kelly criterion, like calculate how much money I can afford to lose before I get fired or get divorced or whatever it is. And then,
how,
you
how, how
know,
much money? How much money is that, Jonah?
no comment. But at the same time, um, usually you just it's a function of your dry power. When you go into these like technical no price makes sense, every price makes sense markets, um I use the Kelly criterion, like a half Kelly.
Yeah, I think that's fair. I mean, look, Yes, my long-term value for BCH is probably zero. That being said, the crypto markets are, let me put this in the nicest way possible, are influenced by a lot of factors that have nothing to do with fundamentals, and often it's easy to change the pricing of these assets.
Yeah,
And
commodity markets
so
are the same way, but like over the short run, that's true. Over the long run, the fundamentals always win.
when you see evidence of something moving for inorganic reasons, and the inorganic reasons can often be a spot bid that's come out of nowhere, a very, very sharp price movement on an illiquid coin, a large increase in open interest on futures contracts that correspond with a large move in price, normally more than 30 to 40%. And then you see the drivers of that move start to disappear. That's when you take this type of trade,
That I like. That is something
right?
like you just taught
That's
me
very
something.
concrete. It's okay. Well, maybe I was watching the Coinbase Binance spread, and for the last week, this asset has had the Coinbase above Binance, and it was going up, and now it stopped going up, and Binance is above Coinbase. Maybe that's your trigger. Or open interest went up a ton, and it went up 40, 50%. It's no longer going up, and open interest is starting to come down. Maybe that's your trigger. Now, how do you short that thing? What I just talked about. Where do you cover? What I just talked about. Right. That's more of
So
what I'm
Avi, what
talking
you're
about.
talking about is kind of like a pioneering framework in crypto for what most people would call quantamental trading. Like an
Yeah.
input would be the Coinbase Binance spread for a certain token or open interest. And enterprising listeners should be taking notes on everything Avi just listed out and back testing them. Back testing just
Yeah.
how
Don't
what is the
don't don't
lead
don't
lag
trust the words that
relationship?
come out of my mouth. Trust the
What is the
numbers.
lead lag, like tweet at us, like what is the lead lag relationship between the Coinbase Binance spread for Doge and the price of Doge? Is there one? These are cool little quantamental factors that you could use
They're
to build a
phenomenal.
systematic strategy.
And you can also pull. I mean, there are all sorts of random things that affect the price of crypto. Time zone is huge, and time zone correlated with price spread between exchanges is great. So, for example, when Binance is in the lead, you tend to get better price action during Asia hours. When Coinbase is in the lead, you tend to get better price action during US hours, and you can start to, oh, okay, well, how do I take advantage of that? And then it's not just Bitcoin, because Bitcoin's efficient. It's all these other coins out there that, okay, well, when does Litecoin, when is the best performing time for Litecoin? Go figure that out, right? Now, okay, great, you have a strategy now. Congratulations, go make some money.
I think we should debate the Friend.tech app that just launched. I have read about it but not used it. You have actually gotten yourself on there.
Yes.
Um,
Let me
now,
see.
like
I
I'll
get
play
I get
bad cop, you play good
personally.
cop. Maybe we should try and just debate this and like I'll attempt to pick it apart. For the record, I think it's cool and I think it's worth something. But like I could pretend for a minute that I think I could be a crypto skeptic about it, and we
I
could try
get
to debate
personally
this thing.
offended when people sell my shares. So if you sell my shares, I will see it, and I will be upset about it, and I don't think I can threaten people on this podcast, but I will be very upset with you.
You're one of the most unthreatening podcasters out there, Avi. Got no
Excuse me.
tattoos. Oh, oh shit. All right,
Are you
fine.
kidding? I don't know if you know this, but I used to cage fight, right?
Really?
Yeah.
I'm not gonna challenge you to a cage fight.
I
I
used to
could I
I
could
used to
like
I wrestled in high school, a little bit in college,
oh,
and
really?
then yeah.
I played cello.
So call me non-threatening again.
I'll
Come over
play
there
I'll
to
play
Copenhagen
cello,
and
play cello and
say it in
against
my
you.
face, Jonah.
So Friend.tech. Let's say that I am a novice, sort of aspiring day trader. I read crypto Twitter. I follow a few influencers. I could theoretically buy those influencers' shares on Friend.tech and get invited into private conversations with those influencers, in which I theoretically might be able to learn something about the market that could help me do a better job profiting from it trading. Is that sort of a correct interpretation of how Friend.tech might work?
Yeah, I think that's a reasonable. I mean, I think that's reasonable. I mean, the way that I would think about it is the financialization of people is inevitable, given the technology that we currently have.
Why does okay? So again, just devil's advocate here. Why does this need to be a crypto thing?
It
Like,
it's just the easiest way to transfer value on the internet. I think we both agree with that.
yeah, okay.
It's
So
like
that that argument's answered.
if you're gonna have value transfer on the internet, crypto is the best way to do it.
Okay, so I agree that people will eventually be financialized. I agree that crypto is the best way to, transfer value on the internet. So we're in agreement there. Um, but there's a difference between financializing people and transferring that value around on the internet and what Friend.tech does, which is allow, like, basically selling access to those people in the form of a sort of a private messaging channel. Um, don't you think that seems a bit uh, potentially dangerous and valueless? Like, for example, if we were trying to say, hey, we're going to have a private sort of invite only version, like paid version of the 1000X podcast, where we, do what we don't do on this podcast, which is offer investment advice and help give you, tips or whatever. Like, that's not something that I believe retail would be able to profit from. I wouldn't feel good about doing that. I don't think it works. I think everybody has to have their own investment process. To the point that we were talking about earlier in our conversation, I don't think you can just sort of follow somebody else's trades and expect that to work for
Yeah,
you. You can invest in their fund and that works sometimes, but in the case of profitable funds, of course it works. But like for oh, get invited into this channel and we'll tell you what to do. Like, do you think that's actually beneficial to retail? Is that an actual use case that works?
yeah. The way okay, so there's sort of two things here, right? The first is it beneficial to have monetary value assigned to access? And I think yeah, 100%. That's like how basically everything in the world works. Is
Can you
there's
give an
some monet
example?
you pay you if you want to go to a club and you're a dude, you buy a table. If you want to go get lunch with Warren Buffett, you pay $5 million. If you want to have a better chance of getting into your MBA, you pay an MBA counselor like 30K to help you with your application. There are all sorts of different examples in life. Just you want access to some. I mean, there was that one Balaji ran some company, right, that he sold to Coinbase. That was
21.
yeah, something like that,
Oh
where you
no,
could
it
pay
started as 21. It started as the Bitcoin computer, and then it switched to earn.com or something like that.
earn.com exactly, and where you
Yeah.
would pay to get access to people. And I view this as sort of a natural extension of that. I think, Jonah, the main worry that I have is that somebody's going to short me and then try to like murder me or something like that. I mean, that's really the like that's really the fear. I'm being serious,
Well, you
right?
know
I
how
mean,
to wrestle. You could just put the guy in a full
yeah,
Nelson.
you can't wrestle a bullet, Jonah.
Okay. All right. You know what? You're convincing me that this Friend.tech thing works. I mean, I sort of believed in it from the beginning, but I wanted to try and play devil's advocate. And as everybody's sort of probably aware by now, I'm not very good at arguing for things that I don't really agree with. So, Avi, you win this one.
No, I
I
didn't even
agree.
argue. I didn't, I didn't even offer any arguments for
I,
it. I just said
yeah.
that if I just said that it allows people to potentially get murdered for profit, which is actually an argument against it. I mean, here's we actually invested in a platform called Fan3, which allows users. It allows artists like a Zed, for example, who's part of the project, or a Liam Payne, or Taylor Swift. I'll use a better example that everybody knows. That the reason I said Zed and Liam Payne is because they're both part of it. But anyway, Taylor Swift, that allows her to issue special access NFTs, to build a website that allows for special access very, very easily, to also basically it's like a suite of tools to allow that has some Web3 components, some not Web3 components, that allows the artist to engage more directly with their fans. And people are happily paying for this for this, right? And so it's one of those things where I think people are willing to go pay for access to people that they view as important or useful or good or fun. People are willing to pay for access to people that they idolize. I think that there's also a gambling element to this where it's you're not only paying for access, you can resell that access, and potentially if you get access to somebody early on, you can make a lot of money by betting that this person is going to be huge, right? I'm sure we've all come across somebody in our life. We're like, hey, I don't know exactly how they're going to be successful, but I know that this person is going to be successful, and I want a piece of that. Well, friend
You're
tech,
looking at that person right here, Avi. His name is Jonah Van Borg, and
you're already success. I
he
mean,
he he
it's
was one of
boring.
the first 100 viewers or 1,000 viewers of PSY's Gangnam Style, right
Okay.
before it really blew up. And
Yeah,
look at me
you
now.
could
I
have
haven't I haven't made a
bought
dime
Psy.
off of that. I haven't made a
You could have
dime
bought
off of that.
Psy.
Yeah.
Psy.
And so two thoughts on your sort of financialization of people and sort of like crypto gives you access to interesting events or access to those people conversations. So thought number one, you are the Taylor Swift of crypto traders, Avi. Just want you to know that you are definitely at the top of your game. You're young and you have a bright future ahead of you. Thought number two is I agree with you. I think that crypto is a fantastic and proven way for people to engage with content creators and for that value to be fungible and liquid. And if you look at Friend.tech, like it or not, it's the third biggest revenue generator in the Ethereum network, right? Like the top revenue generator is obviously Ethereum mainnet. Number two is Lido, and Friend.tech is number three right now. Like people are spending real dollars on this, so or ETH, real ETH. So ultimately, you're right, and it's being proven in the pudding. But to me, just my only actual point of skepticism about Friend.tech is that while I do believe that there is value in access, I think that I think that in the space that you and I um, you know, are professionals in trading, um, I think that value is extremely uh, dangerous, and you need to
Yeah, it's
like you
dangerous, but
can't just take tips from people and expect that to work for you. You know, like if
I
if
mean, you
that
should
if
be
that's
given
what
like you
Friend
shouldn't
Tech
be
is
given.
selling.
I don't
Friend
think
Tech
it's
is
selling that
mostly
at all.
crypto and influencers right now, so I would be worried. Like I would think the product would need to differentiate between like, hey, backstage tickets to an artist's show or a conversation with Warren Buffett, like, kind of innocuous things like that versus like, hey, get in a chat room with this like early Bored Ape adopter for, NFT alpha, right? To
Yeah,
me,
I
that
mean,
sounds a little
I
skimmy.
look, I agree with you, but I think you're painting an unnecessarily narrow hole or narrow
Okay.
paint picture. I think that in about 2 weeks, this thing is going to go mainstream. If it kind of is already, there are a couple of gamers that have gotten on board. You're right, it's still like mostly crypto by far, but I think in give it 2 to 3 weeks, I think that people are going to come up with some pretty innovative things here, and I think that the platform itself, I think the core thing here. So there will inevitably be a financialization of people. It started with sports stars, right? There were platforms out there that one of the theses was, hey, we'll let you invest in Messi, or we'll let you invest in this high schooler who might go to the NFL, and you'll get a cut of his salary if he does, and he'll get the money now, right there. So there are all these different platforms out there that tried to do that with sports stars. This is just that, but at greater scale with a better actual pot of people to potentially invest in. It's like social media influencers. Okay, who do you think is going to get big? And not
A
only who do you think is
phenomenal
going to get big,
name
but
too.
who is going to deliver the most value to the people that sign up for to own their shares, right? Here's a crazy thought. Imagine instead of buying a concert ticket, they just like spin up a account for the concert, and the first like 1,000 people to buy shares are the only people that go to the concert, right?
That's
I mean,
kind of yeah.
they're like
Except
so many random things that you can do with this, which is why I actually think that there's a lot of money to be made here. And if you're not paying attention to Friend.tech right now, you probably should, because even if it flames out, it's worthwhile staying on top of the developments. Because even if it
I
flames
couldn't
out,
agree with you more. Like I
there's
think that
something like this that's going to succeed, and you should have a good understanding of what that something might look like.
no, you're absolutely right, Avi. And I think that like there have been a few iterations of products like this in the past in crypto. They kind of fizzled out, but that doesn't mean that the technology itself isn't perfectly conducive to this use case. And for me, it's just refreshing to talk about something other than Pepe or Barack Obama Sonic Harry Potter coin. Like I'm I'm just sick of that stuff. And to me, like first of all, Friend.tech has a great name. It's slick, it's catchy. Uh, financialization of people is a theme that it, like you said, it's a bit dystopian, but it ultimately appeals to our kind of our sensibilities because of what we've seen happen in our in our recent lifetimes with social media, followed by crypto, followed by basically financialization of other things. So ultimately, I agree with you. I'm a little scared of it, but at the same time, I think that if you're not paying attention, you're going to be missing out on a big trend. This is one of those things that goes mainstream, and ultimately, I don't necessarily know what the best way to profit from this is as a trader,
Well,
other than
buy
to
buy
be
buy shares of people that you think are going to go viral. That's it.
so. Yeah, I guess you have to really maybe the best way to do it would be to like I'm just brainstorming here. You build a bot that monitors people who will almost definitely go viral but aren't yet on the platform, and the second they get on, second they onboard, then you buy. What do you think of that one?
That's a brilliant. I would bet $1 million that people are doing that right now.
Yeah. Like to me, I was just trying to think like how would you
People are
there's no
definitely doing that right now.
friend tech
I feel like by
token.
the time this podcast comes out on Thursday, people are going to hear that and they're going to say, well, just for the record, this was filmed on Monday. Uh, if it comes out, if it's going to come out on Thursday, and people are going to be like, everybody's doing that, Jonah. Like I bet
Duh.
everybody's going to be doing that in like for 2 days.
Yeah, so
If
it's not quite as easy as, oh, well, buy the friend tech token. It's a little more nuanced, but yeah, maybe there's a little bit of alpha in there for people who are willing to invest the time and effort and write a few lines of
Yeah, I mean it's pretty wild. I signed up and people are buying my shares for some reason.
code. Should I sign up?
Yeah, you should 100% sign up. I mean, I say for some reason I actually really enjoy the platform. I'm probably gonna start doing a lot more with it. So,
I think it's genius, and I'm refreshed by it. This is a perfect use case for crypto.
all right, I think it's about time to wrap this one. I
Agreed.
appreciate you spending time with me as always, Jonah, and
Likewise, Avi.
listening to my rants. So it was good. I'll see you out there on Front Tech, everyone.
See you guys out there on friend tech.